Good morning. Welcome to another What's Up with the Market, where I'll do a market status update. We'll go through the indices and a few commodities and just get a status of where things are at the moment. Been a month since we did this. Before we do that, I have to remind you that everything I cover here is general technical analysis, and none of this is used in Sparsary Investor or Sparsary Trader. And I don't use any of the stuff that I'm going to go through today to make any decisions in the ASX and USA public portfolios. And I don't use any of this generic technical analysis to actually make decisions in my own personal portfolios. It does provide perspective and big picture stuff and what's happening, and therefore gives us an insight into how others are thinking that do use this to make decisions. And I just repeat, I'm a mechanical trader and precisely follow our systems. Everything we cover here today is general investment advice, and there's no specific or personal investment advice that should be construed from what I do today. Right, let's get into the markets. So first up, as per usual, I'm going to skip through a few charts today if they're just irrelevant. Because they're just saying what other charts are saying. So I'll decide that as we go through. First up, the Dow Jones. The Dow Jones has not made a new all-time high yet. There is the upper resistance level, the dotted black resistance zone that I use in my charts. And it is underperforming the broader market, the S&P 500, which, as you'll see, is underperforming the Nasdaq 100 and the Nasdaq Composite, which are all risk-on indicators. So I think it was last month or maybe the month before I said this is a market that you cannot ignore. I think it was a couple of months ago, and we'll see why right here in a moment when we look at the S&P 500 made another new all-time high and is above that resistance zone. So I'm just going to zoom out a bit over here to put this into context. Those of you that have watched for the last 7-8 years, I've been doing secular bull market updates. I'll just quickly go to a chart there to put this into perspective, because markets don't make new all-time highs that often. So this is a big thing, and it's a big thing that fits into an even bigger thing, which is that chart. And those of you that have seen the secular bull market updates will know what this means. But effectively, we are 4,470 odd days into a secular bull market, and that's where that started back here in April 2013, where a new high was reached there in the S&P 500, and those are other secular bull markets coming out of secular bears. And this is where 4,470 odd days into those secular bull markets were at the time. So I'm not saying at all that that's exactly what's going to happen here. You can see that the two previous secular bull markets were different. But why I say this now again is that one of the main traits of a secular bull market is that when new all-time highs are made in a secular bull market, they persist and they go further. And we may be looking for reasons all over the place as to why that may be the case. And you know what? We'll probably find more reasons that it won't go ahead than what we will, that it will continue to break out and go to new highs. And one of the traits that defines a secular bear market is that it struggles to make new highs, right? Struggles to make new highs. There's resistance found at big points, and that's got to be taken into consideration when we look at what we're looking at the moment. I'll look at one other chart, which is a short-term Fibonacci on the S&P 500. But before I do that, I'll go back to this chart, and just quickly look at where we are on the breakout. So there's the breakout. Now, what I do is I put the upper part of this zone, this resistance zone, at the highest previous close, and that was over here is the highest previous close. So we closed above it, and this gentle trend is going. How do we know it's gentle? Look at the volatility is falling. One of the traits of coming to the end of a run is that volatility does fall, particularly in indices. And what so what does this mean now in the short term? And this is probably the theme of today's session, is that this has been a hell of a run up. There's no doubt about it. And some kind of retracement is expected. We're getting into the mature part of this primary bull market here. Liberation Day announcements were somewhere over here, massive sell-off, V bottom, and off we took and off we went again and made a new all-time high. So we should expect, but you shouldn't go and make decisions based on this, because different stocks are going to react in different ways, and doesn't necessarily mean that the ones in your portfolio are going to fall, particularly that we are in a primary bull market in a secular bull market. So let's just go back and get some short-term insight into what may happen. And this is where there's a bit of a conundrum that's forming, is that there is where the all-time high, that zone that I put on the previous chart is about there. Okay, now what you'd expect with a run-up like this is probably a 23.6% retracement would be pretty normal. And that would be only a 23.6% retracement would indicate strength, right? And a 38.2 is probably a more normal one, which is all the way down here. So the conundrum is that this market hasn't gone far enough above the breakout for a primary bull market within a secular bull market to probably halt the retracement at this previously resistance zone, which has now become a support zone. So if we do have a retracement from these levels, what I would like to see to really indicate strength of this breakout is that we only have a 14.6% retracement, which will come and find support right where this zone is. And that would indicate big strength. Now, typically what happens when you have breakouts like this in a secular bull market is that the run-up would go a bit further to allow roughly a 23.6% retracement. So there you have your dynamics. There you have your up and lower boundaries, if you like, is that you can follow this chart, and you could even put your own Fibonacci on from the trough down there, and just measure how far it goes. And if this does follow out like just classic technical analysis price action does, is that we will probably see this price move to a level where this 23.6 rises to round about this resistance zone, which has now become a support zone, and that's where we will see a retracement too. Of course, any retracement that forms a low or a trough above that support zone indicates strength. So that's what we're looking at the moment, and it'll be interesting to see how it plays out. Okay, I'm not going to go through any of these sentiment indicators or breadth of market indicators, because they're all saying the same thing, pretty much that we're in a risk-on environment. It's pretty bullish. It has been for a while, and there's no divergence there. 2/3 of stocks, S&P 500 stocks above their 150-day moving average. All of these are behaving. This last line that I've put over here using my relative strength, relative strength comparisons, and then smoothing those comparisons, and they're all going to be the same from here, are basically saying risk on, growth outperforming growth outperforming value, and we've got discretionary outperforming non-discretionary or consumer staples. That hasn't made a new all-time high yet. We've also got, if we turn on sparse investor signals on sectors, if you like, they're all in open trades and outperforming. The ones that should be outperforming. Here we have the put-call ratio on equities. You can see this has a pretty good call. I've put a 252 moving. It's an annual moving average. That's the blue line. And a 105. That's a 21-week, roughly a 6 months. So an annual versus a 6 month. And this has a pretty good track record of picking sideways to falling markets, and which is really saying there are more calls on than puts. And here we don't have any indication at this stage of this reversing. So put call ratio in favor of risk on. Looking at yields as well, same thing, risk on, and there's no divergence in any of these charts. Fear index pretty much low. We're getting lower lows made over here. That 100 and what have I got there? 105-day, 21-week moving average falling. and into lower zones of the fear index. Right, Nasdaq Composite, also risk on. Why is it risk on? Outperforming the S&P 500. So we've got the S&P 500 outperforming the Dow, as I said earlier, and you've got the Nasdaq Composite outperforming the S&P 500, and you've also got the Nasdaq 100 outperforming the S&P 500. So we are seeing this all new time highs as well. Nasdaq Composite new time high, Nasdaq 100 all time new high as well, and all of the sentiment indicators are backing these. There's nothing to say that we are overbought even. So here's an indication of the number of stocks above the 150-day moving average in the Nasdaq 100. We are not at overbought levels yet when you look at these breadth of market indicators and other indicators, but obviously as the stocks rise, those are going to get more and more overbought. The one that is that hasn't quite got there yet is the SOX, which is a semiconductor sector index. Hasn't made a new all-time high yet, but became risk on, latest to join the party. That was only on the 10th of June, well, some 5 or 6 weeks ago, and it is outperforming. So what we look at here is how's this the sector doing relative to the Nasdaq 100? Well, it's outperforming. That's relative strength to the Nasdaq 100. So it's outperforming the Nasdaq 100, which is what you want to see in the first instance. What we would like to see to continue the strength now on that side of the coin is that this makes a new all-time high as well and breaks above that resistance level and then continues to outperform the Nasdaq 100. So that this is probably the only little bit of a handbrake on, but it has been strong, as we can see. Relative strength is is outperforming. The TSE 60 and just to say the other markets making new all-time highs. The Canadian market heading to new all-time highs. The Aussie Battler, the All Ordinaries, also new all-time highs, and as it should be doing in a risk-on environment, underperforming the S&P 500. So rising all-time high, but underperforming the S&P 500. All sitting over there just nicely, like it should be doing in a bull market, and one that people should be in. And if you're not in, what's going to happen from here? Well, we'll just carry on this, and I'll come back and give a bigger picture in a moment. So the Nikkei also struggling now. This is where it has struggled. This is its all-time high from back in 1989, and it has found massive resistance over here and confusion about what to do at these levels, but it is up there above its 1989 all-time high. The DAX the same. DAX has been underperforming the S&P 500 after a good run up over there, but still above its previous all-time highs, and it has stalled a bit. FTSE 100 also above its new all-time high, underperforming the S&P 500, which is done for many years now, but it is at an all-time high, just reached a new all-time high overnight as well. Bovespa is retracing. It's after some strength, a good run up over there, but is now underperforming the S&P 500, but above its all-time highs as well. The Chinese market underperforming the S&P 500 just over more recent times over here, but it did have a section, a period there of outperformance, and the Chinese market and the broader Chinese market also having a run up, both at resistance levels at the moment, but matching or underperforming, slightly underperforming the S&P 500. The Hang Seng which I've introduced here, just made provide an entry signal, but a long way from all-time highs, still pretty much following. Look at that underperformance of the S&P 500. Okay, the South African market also moving to new all-time highs. Why do we look at this? Indication of resources, and it's actually slightly either matched or outperformed the S&P 500 and underperforming by less than what the Australian market is. So the other two major resource markets around the world, the Canadian market and South African market, both outperforming the Australian market. Okay, let's just quickly have a look at a couple of commodities, and then we'll go to questions. So this is that's gold. Gold has found some resistance. This is a bit of an ascending triangle forming over here, and he has a symmetrical triangle on relative strength to the S&P 500. Also forming over here, which is going to indicate a breakout either up or down. When you see asymmetrical triangles like this on indicators, they don't necessarily follow the rules that it is a continuation pattern, but and this ascending triangle is a continuation pattern. So gold getting set to test these levels, these resistance levels over here to see if it can go to a new all-time high. Silver is battling to catch up. It's supposed to catch up. That's what all the textbooks say. It isn't. And there are a couple of other metals that we'll have a look at, and then we'll finish the session. This is silver within the channel. It's slightly it's had a couple of bashes over here to try and outperform and catch up to gold, but it hasn't. And there's the long-term, if you like, ratio between gold and silver. The blue chart over here being silver, the gold chart, silver being the bottom chart, gold being the top chart. And there is just a guesstimate of the balance, if you like, of where the ratio is. They're in proportion. So effectively what this is saying is silver's underperforming gold, and if it does catch up, it's going to have to try and get to that red line over there on a relative basis. Okay, let's have a look at copper. Copper is soaring to new all-time highs and has just formed. I've got this relative to the to gold and underperforming gold. There's also a ratio there on gold, so there is a bit of a copper to gold ratio on this. And what is formed here is a bit of a pennant, and there's a breakout out of that pennant. So it looks like copper is going to go higher. Now, when copper does this, typically small cap stocks, particularly in Australia, do tend to do well, do better. And we haven't quite seen that yet. There's still pockets happening in the resources market on the Australian market. Okay, this is oil, long-term downtrend, been going for about a year now, and hasn't quite broken out of it, and looks like it's making lower lows. Now, this is Bitcoin. Bitcoin has had a new breakout, to a new all-time high. When did that happen? Back here on the 10th of July. Got up to $123,000. A little bit of sideways movement over here. So what should you see here? Well, what I just spoke about on the S&P 500 chart is that you should see a retracement here and come down and test these levels. If it doesn't test these levels and makes a new high from here, then that is pretty strong price action. So we're still on the upswing. The downswing has started. The upswing is completed. That's on the 3-day swing chart. And so we want to see where this next low forms over here. But this has potential to be just purely without going to any fundamentals on Bitcoin or anything like that, just looking at this purely from a technical analysis perspective. When you see how this price action, just looking at this price action, say the price action was ABC or 1, 2, 3, is that when you see these levels of sideways movement, breakout, sideways movement, breakout, is the characteristics of this price action of this ABC 1, 2, 3, which happens to be Bitcoin, is that this breakout will take off and go to higher levels. That's been its characteristic for some time now. And we'll see. What we want to see here is whether the volatility is slowly coming out of this price action or not, because now everybody's saying it's becoming more mainstream, and therefore there's going to be less volatility. I don't know the answer to that. We're going to let the price action tell us, but this is just a bit of a retrace, a bit of a breather here after that breakout. What happens from here is going to be key to watch. Ethereum playing a bit of catch up, nowhere near. So it's also in the sideways moving market. Doesn't have as much price data characteristics, or the personality of Ethereum isn't quite as established as what Bitcoin is, but it's in that space and is the number 2 coin, if you like, in that space. And so hasn't had a breakout above to new levels, but is certainly at a sharp rise of recent times. Right, the 2 that I want to finish on are platinum and palladium. Now, I showed you this is the green chart here is gold, and the red and green here, the bar chart, is platinum. And this is the ratio of the gold to platinum ratio, if you like. I've put an eyeballed Mark II red line through over here just to show where platinum underperformed gold, overperformed, underperformed, outperformed. It's obviously not a steady relationship, but it does have this outperform, underperform nature about it. Platinum widely used across all the spectrum of industry and even new industry. And what's happened here is there's been a classic breakout. There's been a classic breakout. I'll just remove this over here so it's not so. And I have spoken about this before. So I've removed the Australian platinum ETF there, and I've left platinum. And the black line that's on there is actually the PPLT ETF that trades on the US market on the ARKX. So it's a pretty close relationship. And the little bit of breaking away, the gaps you'll see will just be fees. This down here at the bottom is the ETP MPT ETF, which trades on the Australian market in Australian dollars. And you can see this breakout. And I've raised this already, and some of you may have acted on it. And so what have we got? We've got gold. We've got silver playing a little bit of catch up. Here we've got platinum. This is classic technical analysis breakout stuff. That is such a strong breakout. And sure, will there be a retracement? Maybe down to that resistance level, previously resistance level, which has now become support. But this is such a prominent breakout that it looks like it's going to do something like this. Not exactly the same, but it could do. And there are stocks that you should go and look for that could that you could possibly make some money in this. One in Australia is Chalice Mining, and have a look at that now. The other one, which is just having a breakout now, which tends to also do similar, is and I'll just put this on here. This is Palladium versus platinum. So the blue line is platinum. This is Palladium, and you can see at times they do sync, and there is a bit of a catch up. You can see that when they do move, they move a little bit in unison. But Palladium is just showing the same breakout pattern. The orange line here is the Australian ETF, and the PALL is the black one. You can see how closely it matches the Palladium price. And Palladium has been on a couple of really, really big runs, and you can see them in the past over here. So when these commodities trend, they tend to trend long and strong. So here's the breakout on the bottom chart that you can see in the Palladium ETF here in Australia, and and this could catch up to platinum, which might catch up to gold. So dead certs, no dead certs, but this really is classical technical analysis that is that you could take heed of. That is kind of outside of our mechanical systems, and we'll look at ways of bringing them in at some stage. Okay, that's where I wanted to finish. As I said, an abbreviated session today, just to focus on the main indices and what's happening. So theme over here is keep an eye on what happens with the Fibonacci on the S&P 500. That's going to lead everything. And just as a reminder, there it is, and you can get this analysis. It'll be made available to you. Is just watch what happens with this retracement, how far the S&P 500 gets above. Sorry, I didn't save that I put on here. How far it gets above that breakout, and where the 14.6 and the 23.6. I don't think the 38.2 is going to come into play here, but it might. Okay, I'll finish there. Let's see how far this breakout goes. Any questions, or is that all good? No questions. Thanks. Bruce made some comments earlier. And right, I'll finish it there. And this recording will be out later today. Thank you for your time and attention, and hopefully that's been useful for you. And as always, I wish you objective, consistent, and peaceful active investing and trading.